Hi everyone, George DeSantis here with a look at the market for the week ending December 18, 2015. We'll take a look at the monthly chart of the S&P 500 first. So this is a monthly chart of the S&P 500 and it clearly shows continuing weakness. The Kalman filter crossed below the instantaneous trend line here and it continues to remain below the instantaneous trend line. The second thing we could notice is that the parabolic yellow dot is still above the most recent price bar, which is the month of December, of course, and the bar is red. According to the impulse system, Alex Elder's impulse system, when the bar is red, we ought not to be looking to buy the index or an individual stock if the bar is red. So in this case, we ought to be very cautious now because this market is in a downtrend or it's showing a lot of weakness. MACD histogram, since the fast average crossed below the slow average, has remained there, and the fast average remained below, and also it's reflected in the MACD histogram, of course. So MACD histogram is below the zero line, that's in bearish territory, confirming this downtrend that we see. Elder Force, the 13-month average of the Elder Force index is once again below the zero line in bearish territory. So as we can see, this market has lost a lot of strength. For the entire year, we've been losing strength, especially from the middle of the year. So the monthly chart is pretty weak. There is no indication of a turnaround yet. Let's take a look at the weekly chart. So here's a weekly chart of the S&P 500. First thing I like to look at is the relationship of the Kalman filter to the instantaneous trend line. We can see that since the Kalman filter crossed above the instantaneous trend line here, it's remained above it, but with the overhead resistance at around 2100, it's bumped up against it a number of times. The S&P has bumped up against that 2100 resistance level, and it hasn't been able to breach it. So the Kalman filter has begun to turn down, especially with that big bearish bar from last week. Now this week we ended up with one of these doji looking candlesticks. It's a doji. We should notice too that the Kalman filter remains above the instantaneous trend line, but if this momentum continues, it won't take very long for us to cross over that instantaneous trend line. Now, I put the 1993 level here because that's what we saw as a 50% retracement on the daily chart, which we will visit again today, next anyway. Interesting that this week's S&P prices actually bumped off the 1993 level and closed slightly above it at 2005. Now RSI 12 is now below the 50% line, and so the trend is now down. MACD histogram is slightly above the zero line, 1.96, but that's looking pretty weak here because we've been trending down in the last couple of weeks. At the bottom of the chart, Williams percentar crossed below the 80% line, indicating that momentum has broken down, and it is now just hovering around above the 50% line. Should we break below the 50% line, well, we know that this is really going to be even worse for the S&P. It's going to be a while before we get back to a real good uptrend on the S&P 500, I think. Let's take a look at the daily chart. Okay, so on the daily chart of the S&P 500, notice a couple of things of importance here. First of all, the Kalman filter broke below the instantaneous trend line about 2 weeks ago, I would say, and it's remained there. Not only that, the S&P came down and hit that 50% retracement line, which was at exactly 1993, and it rallied a bit from there, but it could not overcome the overhead resistance of the instantaneous trend line. This instantaneous trend line is now acting as resistance, and we can see that this bearish engulfing candlestick was really foretelling what was to come on Friday. This was Thursday's bar, and on Friday we gapped down and closed just above, as we saw on the weekly chart, just above the 1993 level. We closed at 2005 on a fraction. So this daily chart is also looking very weak. We are having lower highs. Here's a high, here's a lower high, here's an even lower high. Lower lows. Here's a low, here's a lower low. Perhaps we'll even see a lower low here. So we're in a downtrend. On all three time frames on the S&P, this market is trending down. Of course, I mentioned to you some couple of weeks ago, I sold everything I had and I'm in cash. Now, if we take a look at the Jerry Appel's sum of the rate of change indicator, we can see that since it went below the 4% line, it remains there. MACD histogram is in negative territory at minus 5.96. So MACD is now in bearish territory. It's been there for a while. Percent R at the bottom of the chart broke below the 20% line. Now, there's two ways to look at this. You might say, well, that's an indication the market is pretty oversold. The momentum is down, but it's also indicating it's pretty oversold. And when we had oversold conditions like here, which was somewhere in early December, and we also had another oversold condition here, market rallied a bit, but it doesn't necessarily mean that we could look forward to a big rally from this point on. In fact, I'm not anxious to buy anything right now. I'm holding cash. We might get a rally into the end of the year, but I'm not convinced. I'll have to be convinced. Let's take a look at one more chart. Now, the next chart I'd like to look at is the stockcharts.com chart, which provides us with the impulse indicator, Alex Elder's impulse indicator, where you get your blue, green, or red bars. Right now, as we look at the weekly chart, we can see that for the past 2 weeks, we've had red bars. And the way Alex puts it is that when the bar is red, you ought not to be looking to buy this index or this stock, as the case may be. So right now on the weekly chart, we should not be looking to buy the market. In addition to the impulse bars that are red, I would note also that volume picked up here last week. So that's pretty bearish. Unless this is a capitulation, which I don't think it is, but we'll find that out soon. That's what I wanted to show you. Let's take a look at the daily chart. Let's update it to the daily chart. And we can see here on the daily chart, similarly, we had some red candles coming down here. And then we had a couple of bullish candles where we were allowed to buy. However, on Friday, the bar turned red. So again, and that's on very high volume. Notice the volume, the bar histogram here, pretty high. So we might have a capitulation here, but I can't be sure about that. We'll find out as the week progresses next week. That's all I want to say for this week. I hope you have a good weekend, and we'll talk to you next week.